So, hello everyone. Today we're gonna analyze the Nifty 50 chart trend. If you could see, the market has really been on a downhill side since the fresh high that market made on 26th of or 27th of September, and since then market is around 4,000 or 3,500 point down. So roughly that is around 12 and a half, 13% down. But the thing is, there was a correction needed. You could just see that market has been on a really bull run since the COVID pandemic, since that April 2022. Maybe there was a bit of a consolidation phase at the time when there was a global tensions that Russia-Ukraine war. There was a talks of recessions for this period, but there's a little consolidations of maybe I think around 1.5 years, and then after that again market was on a roll. So the last 5 years the market has really been uh, good, and it has gained at least you know 14,000 points. So if you see here in January 20, it was around 12,500, and it made a fresh high of 26,000. So it doubled. So yeah, after making a fresh high, there obviously have been profit booking by the large institutional investors. The overall more of a correction was really anticipated, and so it has been doing that. Now on a down phase, in a downturn, we did see smaller bounces. Once in here in November, and then it again made a new low on. I think it was on in January, and yeah, and then this budget came, and there was a bit of a buying, bit of a relief rally, but did the market really did the corrections, and now what in what direction it's gonna go? So currently it's more of a holding this small ranged trend line. So I think this will be really this trend line will really be the for the first thing that the market needs to break. It rejected on the 4th of February, and since 3 days it has gone down, and then in the next week, if it comes back up, because we're done with the budget, mostly the corporate earnings of the Q3 has already been out. It's not really that bad. If I just could just show you that if you see HDFC Bank, quarter-wise, if you could see, it made a net profit of 23,000 crores, 23,900. It's similar to September, and in June and in March, when the scenes were sorry, it's net profit. Sorry, so 18,000, 18,000, 17,000, 18,000, 17,000. So it's more of a similar range. This constitutes, I think, 15 or 12% of the net Nifty 50. So you are not really seeing data wise any decline in corporate earnings. So it's there. If you could see ICICI Bank, okay, sorry. So net profit, ICICI Bank, still the same. No worries there. It's really on an increasing trend. If you see really quarter on quarter, if you see Reliance, no worries there. The earnings has really been good, and few other name if you see, suppose if you take auto, see, no worries there. The profits are intact quarter on quarter. There's no, slow down. Everything, the fundamentals of these big guns are in solid conditions. There is nothing to worry about. And if you see Mahindra, see, it's all good. No worries there. So, so, so the fundamentals here were really not that of a like some of the companies were not that great. Still, the market made a move because it was following the momentum. And now, in a downtrend, the profit, the earnings has increased. So I will not be too worried. I would be continuing to add my whatever the 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 pickers that I have chosen, the stock pickings that you have already done on the basis of your research, your own research, and if uh, if those fundamentals are really strong, and you think that the large economy is not going to play a part on those fundamentals, then you should continue your investing. If I would say double down, triple down, based on your risk appetite, because 12 to 12, like the legendary Peter Lynch says, 12 to 24 is 12% gain. But if the market goes from 12 to 6, and from 6 you could catch to 24 and you get an 18%, that's phenomenal. So don't worry, keep on investing, I would say, and I'll be back with another episode of watching markets. Thank you.